Oi. Lizzie, what do you like? What do you like?
All right, we are back with Mr. Howard Lindzon. About to go on. You're doing 2 months around the world, just leaving America. That's it. You've had enough. You're gone.
Yeah. I am around the world buying commodities for my backyard: scrap metal, copper, helium.
You just throw helium in there with metals? Is that the kind of market we're in?
Here's how I get helium. I hold my breath and I go.
Are you bullish helium? You're bullish helium. You like the helium.
I'm long too much helium.
You got too much helium.
Here's the thing about how much helium I own. I'm scared. I'm both either excited or scared to open my statements. I was an investor. I think I got you into it. I'm an investor, and there's a good podcast I have up by the time I did this with Tushar Jain, one of the founders of Multicoin Capital. It's probably
I'm not in it. Why am I not in that deal?
It's not a deal. It's like it's a token. It's a layer. It's a protocol.
But you didn't get me in.
HNT. And are you going to let me talk? Am I the guest?
No, you're not a guest. This isn't like a guest thing. It's just you and me bullshitting.
Listen, I have this thing where I wake up now and there's like a Carl Icahn age spot on my head, and I think during this conversation another one came out. That's how old I get. My skin is like changing in real time.
Yeah, you look younger as you get older. You got like that reverse thing going.
No, I heard you guys say that, and it's very nice.
I didn't. It is the first time I ever say that.
Oh, I've heard it said on the internet. I've heard a lot of mean things said
on the internet.
Too. No, I think Josh Brown or Phil Perlman said it. So here's the thing. Helium is cool because it's a new business model attached to a token, meets an industry that is hated, like the telecom business. Can you create a Verizon? Can the people create their own Verizon and AT&T? There's crickets of the world, and we don't know how they're built, and it could be like WorldCom, they're sold up, and is the quality as good? But helium is something where the people can make money of powering the network through mining the helium token, and you're doing that. But anyways, what an interesting time. I'm heading around the world to catch up. I don't understand this new world. Listen, I'm 56. We're in I think the worst tech bear market since 99. Unlike 99, I have a different view of the world because I don't need to make money from stocks. So tech hurts, but like I don't have to be in tech, right? Like I don't have to make a living from being in technology stocks. But I also don't have to make a living from being in commodity stocks. But reading you and talking to some Lewis Johnson and some people that have been through who follow price and have to make a living or help their clients make a living. This is a fascinating moment in time. You have inflation, rising interest rates, war. We haven't been investing in infrastructure in, I don't know, forever. And while we have incredible technology stacks, from the cloud to the companies that work through the cloud, whether it's Cloudflare or Twilio or, all these Shopify, all these companies built onside the cloud, they're trading at multiples that even in a tech bear market are hard to fathom. And when the momentum, they were fathomable while momentum existed, but they're really not fathomable now that momentum doesn't exist. And so people are kind of trapped, it feels like. And so I'm taking a couple months off to work and travel. We just hired a new GP at Social Leverage. So we're growing our firm. And part of my job is just to see what the hell's going on and talk to people. COVID's over for at least me. And, so I'm excited to see what's out there. But it's quite obvious from reading you and from reading the people that I read that we're in some kind of glut. We don't have enough of what we want, oil, or what we need right now, oil and food. and certain commodities, but we have too much technology stocks. And the reason we have too much technology stocks is because of the cloud. We have, in a land-based economy, pre-cloud, businesses failed at like 80 to 90% clip rate because you had to spend $100,000 to get your business set up, and that's crazy. And in a cloud, just that little part. In a land-based world, if you have a laptop, and you do, or an iPhone, you're in business. You can set up a Shopify store. So you have this world where you have a glut of companies that aren't going to fail, that don't necessarily need to fail, but they can't support the valuations that go on out there. There's not enough great companies. And so what we're seeing right now in the stock market and even in the private tech markets is just a lot of companies that are fine, but not good enough to command multiples in this type of environment. And so you have this supply glut, which is what I thought a couple of years ago when I was writing about this, that the only way this bull market ends is through supply, because companies are getting formed like crazy and they're not dying. And here we are. If you're not in the index and you're a public company, there is no natural buyers for your stock. There's too many public companies that aren't indexed that are pretty good, and no one owns the stocks. So you have selling going on every day.
Let me ask you this, Howard, taking a step back, right? So a lot of the things that you're talking about, technology stocks have gotten crushed, anything growth, small cap growth, biotech, all of these high multiple names just getting slaughtered as interest rates have been going up, right? Those long duration trades, if you will, just getting slaughtered, while some of the more cyclical stuff, some of the more value-oriented sectors like financials, like commodities, natural resources, energy, materials have been doing great. If you've been in those names, like you've been thrilled, the people left holding the bag and these growth names, by the way, that peaked a year ago, right? So none of these trends are really anything new. The best performing sector in America last year was energy. Best performing sector this year, energy. Last year, the best asset class was commodities. This year too. So none of these are new trends. So let's take a step back. What about the thought that we are in the early stages, because we were saying over a year and a half ago that we were in the early stages of a commodity super cycle. But one thing that we know about these macro trends is that they don't last a couple of weeks or a couple of months. They last a decade, like consistently decade-long trends, both up and down, right? We just finished a long trend, a decade of commodities being useless, technology being the place to be, America being the place to be. What if we're in maybe year 2 of that cycle where America's the last place you want to be, where technology is the last place you want to be, and the trade of the generation is long natural resources, short the rest of the market, particularly tech, and playing that unwind reversion to the mean, which has worked very well over the last year and a half.
Yeah, I think like I said, I'm one of the lucky ones because I've made a lot of money in tech, not public tech, but private tech. So I've had one trade that worked for me, and it was getting myself out of the market. And even though I love the markets, and putting myself in a position that best suited my personality. And I caught a big trend because I immersed myself, like you have, in video and content. I immersed myself in the YouTube generation, So when everybody saw YouTube as cat videos in 2006, and they did, because it was, right. I saw it as a chance to recreate CNBC. So I grabbed myself out of the life of trading and I immersed myself in technology. And it worked. I caught a trend. I think if you must survive in the market right now, you have to be realistic about price and trends and the macro. You don't have to be a macro expert to know what's going on, right? God willing, Putin doesn't really do something stupid, and it's just a short war, hopefully, or it's hard to see out the other side because we've pinned him in many ways, financially and media wise as the devil. So he doesn't have a way to save face if I were to look at it today. So that scares me as just a person who has capital and can do anything, but like I'm at the mercy of his mood, it seems like. So from that aspect, you have to understand that there's a risk-off mentality going around the world. And if there's a risk-off mentality, Food still matters, commodities still matter, and people will fight over those things. So I think I agree with you. We're in some kind of trend, and people haven't been flexing that muscle. Both investors, traders, especially young people who didn't know that this even was a thing, and the people that run these companies, they've been underfunded and neglected for so long. So there's a lot of catching up that has to be done, and we're seeing it in the prices of from wheat to coffee. I see charts thrown around the internet, and I'm like, whoa! I don't even know how to trade those things, let alone start thinking about what I'm supposed to sell to put myself in a position to own those things, right? So there's a lot of portfolio reconstruction that has to go on. On the way to that, about 6 months ago or 7 months ago, I mean, I saw the writing on the wall, and I just started raising cash. Whether it was, and people say you're crazy for owning cash, but there's for me, before I can learn something new, I got to go back to cash and figure out how I want to be, because I don't consider what I do trying to beat the market. I'm not trying to beat the market. But when I'm in the market, I want to totally beat the market. But there's certain times, like right now, where I'm so confused that I just need to be in cash and keep my head and read and kind of think about it. I saw a chart that you guys shared yesterday from the chart report, which is great. And it was about, it was how commodities from March 2020 have now surpassed the NASDAQ of 2020, from March 2020. And that's an important chart, because if you take away all the noise, the media, the narrative was, we've got DocuSign and Zoom and the digital tailwind. It was like it was a thing. I was saying it. There wasn't a person for the last, until the last few months, talking about commodities, or at least the drum of commodities. And so basically, as these crossed today, 2 years later, what we really had was a commodity tailwind. While all this was brewing, we had a perfect storm forming for commodity tailwinds. And obviously, in hindsight, digital made sense. March 2020, you wake up, you can't leave your home. Thank God we had the DocuSigns and Zooms of the world. But in the end, while we were so excited and kept investing in tech because that was our savior, we forgot that cycles exist, and everything we neglected has turned out to be important. And it's not that Zoom isn't important, but hey, we need to get food moved around. People need to be fed. We need resources. And so we really actually had the perfect storm for a commodity tailwind. And and these trends can go on longer than you think. And if the commodity tailwind isn't even a narrative yet, right? Because we're still saying digital tailwind, and the analysts are still trying to figure out, will Peloton come back? But they're not talking about
how high
materials and industrials.
Howard, one of the things I've noticed is that, as you're well aware, as you talk about all the time, we have so many new investors that have come on board over the last couple of years. And then even take out the last couple of years, just over the last decade, just simply as a function of just new investors have new money, kids are getting older, now they're investing. And then obviously the last couple of years really accelerated that. Great. So there's a lot of new investors that have never seen a cycle where commodities are outperforming, where tech is the worst place to be. A lot of investors haven't seen that. So I can understand how they're having a difficult time wrapping their head around, buying oil drillers and Chilean lithium miners. I get that. But I'm also having these conversations with people much older than me, very smart investors, who have been through these cycles before, multiple times, and even they want nothing to do with oil and gas and nothing to do with material stocks, and all they want to talk about is technology. So and I've been paying extra attention because we've been on this commodity super cycle for a year and a half. So it's not like we woke up, there's a war, oh my God, commodities are up. Like, this is an old trend. This has been going on for a long time, a year and a half. So not even close to beginning. So I'm noticing new investors ignoring it and not wanting to be a part of it and not understanding it. But I'm also seeing it from the people who have seen the cycles before. How do you feel about that?
Well, I think you're right. What I've done, when I'm saying as an old person, what I've done is at least I recognize the carnage in my own portfolio. I was like, okay, I'm overexposed to fintech. I'm not dumb. Like as soon as fintech became so popular, I'm like Rodney Dangerfield. I'm like, oh my God, I'm screwed. Like I was investing in fintech when no one even wanted to touch it. The good news being, if I was forced to invest in fintech in the public markets when I started, I wouldn't have made any money because I would have been looking at my portfolio for 8 years and it would have moved nowhere from Schwab to E-Trade. So I would have been scared out of this trade forever. But luckily for me, I attacked it from the private markets where you were locked in. I was locked into Robinhood while it was hated. I was locked in to StockTwits and all the things that I was investing in that were going to make fintech better. And then about 2017, 2018, Andreessen wrote a post called, fintech is everything. And I looked at and I remember writing about it, like, oh God, like this is the end. And it took another 2 years for it to be the end. And now you've seen Square and PayPal and pretty much everything except Schwab and Goldman dropped 70%. So what's old is new. So I got scared out or stopped out or crowded out of the market over the last 6 months. Like I said, I've had difficulty putting the money in the market, but luckily I don't have to. So I can go from 100 to 0 back up to 30. So my goal right now is like, I can read the tape. I follow smart people. I'm talking to people that have been through commodity super cycles, but I don't want to play because I have the same problem that I had the first commodity super cycle. I don't trust the people involved in a way. Like I don't understand how it all works. There's very much more global macro involved in food and a lot of politics, and they don't understand the supply and demand. And it's a very complex, the cloud's very simple. The cloud, you pay and you scale and you know where your customers are, and the cap tables are very clean, and there's no government involved until you get to the Facebook size, and you can scale your customers off Facebook and Google. There was this formula that worked, and you could see everything happen, and you could measure your growth, and valuations just got crazy because everybody figured out how to do it. And now we've got to go back to learning an old muscle memory, is like, who controls the stockpile? How do I trust pricing? How do I move stuff across a border when there's war zones? How much gold really is there? And then you throw in Russia. But from a pure price commodity tailwind thing, yeah, it's obvious. And but that doesn't make it easy. That doesn't make it easy for me.
Howard, you know a lot of technicians, right? I've introduced you to a bunch. You've met a bunch on your own. You play golf with some of my technical analyst buddies and all that stuff. Isn't this a great example for anybody out there listening out there? All of the things you just said, how difficult it is to understand oil and gas, the politics involved. Isn't it such a great example of why technical analysis is such a valuable tool? Because we don't have to pretend to understand any of that stuff and we could just follow price?
Absolutely. But there's two things. Some people just can't do it. Meaning, as someone who when I didn't have money, it made more sense to me price than when I do have money. Because remember, I have two huge things that affected my life. First, believing in technical analysis and more price and context and relative strength and where money was flowing. And that makes sense to me. As someone who didn't have money, was in money accumulation, when I found stuff that had price trend in the public market, that made sense to me. IBD or whatever you want to call, relative strength or price momentum. And you and the community at StockTwits helped me learn that. But I also had a better learning angle in the private markets because I didn't have to invest for tomorrow. And as a non-options trader, investing in people and technology is like a long dated call option. So if you truly understand a market and you have a passion for investing in tech and startups, what worked for me is I didn't have to be right day one. But I understood the underlying trends. I understood the underlying technology. I understood how the cloud and margins and software worked. So I had a time dated, hundreds of time dated call options based on people and software and networks that will continue to pay off. So, lucky for me, as this cycle has changed, and it has changed, like there's commodity tailwinds, there's geopolitical ping pong and risk out there, and you have all the things that make tech not the place to be. At least I get to continue what I'm passionate about, which is private market investing. What I had to deal with, which is not in the headlines, is the private investing tech side of the world is completely disconnected from the public tech side of the world. So these 70% drops in public tech companies has not made its way back to the private.
Haven't seen that at all? Not even a little?
No, it's the other way. So you have
Really?
you have worse pressures happening. You have young founders who aren't following the stock market and see their friends at Uber raising money at these crazy valuations. And this is really important. I talked about it on Odd Lots with Joe Wiesenthal. You have still so much money in the system from all these funds, from Tiger to Andreessen, and they keep trying to move further down because they've mucked up the public markets in tech. Now they've mucked up the late stage private markets in tech, and everybody's trying to hide their capital losses as this tech cycle ends further and further down the cycle. Now they're starting to invest in early stage funds. So I'm getting crowded out of my own market, which goes to why I continue to raise more cash. I'm not going to put money to work in tech just because I know it. The prices have to be right. And right now, the prices are a huge disconnect. So private market prices have not corrected at all. I think if you look at housing, same thing's going on. It's like the underlying tech stocks, the people that are rich in tech stocks, their stocks are down 50 to 70%, unless you're in Apple or Google or Microsoft, and including Shopify. And they've levered up whatever it is, their balance sheet, to these tech companies that they never thought are going down. But home prices continue to rise. So I feel there's also that potential shoe to drop, which is people are moving like crazy out of California, moving out of New York. And so there's all kinds of supply chain housing problems, right? Like Phoenix prices are going through the roof. But as someone who sees the underlying damage in some of the markets, I'm like, at some point, there's a lot of disconnects right now. And they're showing up in housing, and they're showing up in early stage investing. So for a person like me, I'm trying to figure out, I can feel the commodity because I read the news and I watch what you're doing and I follow price. I can feel this commodity boom coming. You can feel gold tightening and getting ready to go. Yep. You can feel copper tightening and getting ready to go. You're seeing rare earth companies getting ready to go. But I don't have conviction. So for me, I just don't want to just be in the market to be in the market, and I'm in a position where I can be higher cash.
And by the way, a lot of investors are in a position where they can be in cash. A lot of institutions have certain mandates where, they can only have a certain percentage in cash and all of these things. So understand what your particular mandates are. And as an individual investor, your number one mandate is to not lose money. And then you go out and you can try to make some money if you can. Listen, I know you got to hop in a few minutes. So I definitely wanted to touch on, Web3 in general. You and I have had some conversations. There's some stuff that you're just like, I hate it, I can't understand it. And then there's some stuff that you love and you seem to really understand it. So can you talk about the different dynamics of what part of, Web3 and the new world you understand and appreciate and are investing in, and which areas do you just not get and you're staying away from?
I don't get any of it except community. So I get what I get. Right, like, because I've been through some cycles, right? Like, it's not going to solve, crypto. It's not going to solve world hunger. It's not going to make everybody nice on the internet. It's all this stupid stuff. Oh, we'll make Twitter, but decentralized. Okay, fuck off. Okay, that just sounds like another religion to me, right? You can't have the open internet is going to be so ugly and so mean and so dark, right? If people think Twitter is dark. Okay, Twitter's dark because the founders of the company don't understand community themselves. But centralized web is pretty damn good. Okay. And people will look back at it and go, we missed the days of centralized web. What I love about this new Web3 is I think it'll solve this oversupply problem. I think what you have right now, and I talked about it earlier in the indexing thing, not every company needs to be venture backed. So we've gone through this period where everybody wants to raise money from a venture capitalist and build $1 billion company. It was that Facebook phenomenon, the movies. Everybody wants to be a billionaire, right? All the TV shows, all the reality shows, all the YouTube stars, they want to be a billionaire. They want to be a player. They want to buy a plane. They want to buy a Lambo. I don't even know
how I would even drive a Lambo.
Again, like, it's just stupidity. And it's funny. Listen, I'm not judging. I'm just saying that ain't the thing. Okay. If that's the thing, and that's what people actually think the thing is, right? Stick it to the man. We're going to fuck Goldman Sachs. They're not checking stock prices. Goldman Sachs is kicking ass. Charles Schwab is kicking ass. So JP Morgan kicking ass. So crypto's a thing. But what I think the thing is, and we'll see, is, DAOs are interesting, but they're not for everything. It's like a different type of LLC. But I think community is the thing, right? And I think because the cloud has allowed so many more companies to survive and thrive, you have this glut of supply that are companies that are good, but not great, which is fine. And I think crypto will help better fund and more realistically help people fund in the long run companies that are just meant to be companies. They're profitable from the beginning, whether it's a 3-restaurant chain or a certain community or a music thing. So I think DAOs and Web3 are more about artisanal communities and kind of like a Kickstarter 2.0 versus any extra special thing. So I think people want it to be like the next Facebook or save the world or solve this problem. But I think it's just more technology that'll get applied in ways that allow small businesses and really creative people to do really impactful projects that can benefit more than just the 2 people that own the most stock. That's my gut. And so I don't think it's as big as everybody says. I think it's big.
It's not big yet?
No, I just don't think people are using it for the right things. I think it's really amazing for a broad swath of people. But right now it's still about a few people making all the money. And that makes no sense to me. But it's definitely frontier tech because there's a lot of shenanigans. And by shenanigans, I mean, there's a lot of promoting, there's a lot of pounding the table. This is what it is. And there's a lot of like arguing about what is, Bitcoin still. And I'm not into that. When I saw YouTube, I knew it wasn't going to be just cat videos, right? I didn't know what it was going to be. But Jesus, YouTube today is like, you can go learn anything about anything and laugh and get great content.
The algorithm is so good at giving me on YouTube what I think is valuable content as opposed to the garbage on basic cable. Like, it's not even close.
Not even close. So in a world where I thought YouTube in 2006 was going to be more than cat videos, and the media was like, this is for cat videos and stolen content, but I went and started my show. So 2022, I look at DAOs and Web3 as a place. If I was going to go start a company, and I've told you the one that I'm going to start, and what did you say immediately when I told you?
I'm in.
Yeah. So I have the most brilliant. It's so small, my idea, right? Like, it's not a big idea, but it's so revolutionary and so much fun for the people that I think will get behind it. And it doesn't need venture capital, right? And I think I can make people a lot of money and bring a lot of laughs and joy. And that's combining Web 2, Web 3, and some polish. And so I think we're at that YouTube moment where the tools are there. Everybody's using them wrong because they want to get rich.
Yeah.
So that's where we're at.
I think it's a great lesson for everybody listening out there, particularly in this environment with the new technology. Not everything has to be the biggest idea to change the world. It could be a smaller idea that is just awesome. Like, what's wrong with that? I love that mentality. It's not all about billions and Lamborghinis. Like, it could be something smaller. It could be relatively big, but still smaller. It doesn't have to be a global changing thing. Howard Lindzon, I know you're leaving for the rest of around the world for a couple of months. When you're back, I am taking you to maybe the best omakase I may have ever had. It's called Sushi Shion, 69 Leonard, down way downtown. Howard, we're going to do a 20-course omakase on me. We're going to drink sake, whether you like it or not.
I got another age spot.
Sake, I'm drinking it all, and you just look at it like you smell it.
No, I'm at the age now where I'll drink. Fuck it. I threw away my Aura ring, and I don't care what my levels are. I'm just like, bring it on.
All right. I like it. Finally. What took you so long?
Well, I just wanted to live this long. Now that I've lived this long, fuck it.
Yeah. Everybody who took the under, you proved them wrong, so now you won.
Proved them wrong. I have enough money in the bank to go do my new thing on the Web3. And but anyways, I still love investing, still love the markets, but I think people really need to, it's not you don't have to quickly get into the next thing, but to get into the next thing and have a clear head, sometimes it means raising more cash and not worrying about how you're doing versus the S&P, because this is a marathon. Like, give up against the S&P for a year or two to crush it later on. Yeah. And there's these transition periods, and we are in a transition period. And if you're wrong and then we go right back to tech, well, that's easy too, because tech. But don't take all your gains that you've made and give them back and be stubborn. You got to position yourself to be open-minded. And so for me, positioning to be open-minded is reducing my exposure first and then easing back, because these trends, like you said, last way longer than 6 months or a year. This could go on for 8 years or 10 years. Yeah, sure.
You hear that, kids? It's not all about the Lambos. Take a step back.
First of all, Lambo's an ugly car. There's nothing wrong with a 911 or a truck that looks good and sounds good. I'd
love to see you driving a pickup truck.
I didn't say pickup truck. It's a Porsche truck.
Now that sounds much more like it. All right, listen, tell Ellen I said hello. Enjoy your trip.
All right, buddy.
See you in May. Sushi on me, I promise.